Okay, so what is business finance? So it seems like everyone's got sort of like a broad and basic knowledge of what business finance is. And business finance is essentially the different finances that you have in your business. There's different ways, there's different types of business finance, there's different ways for you to kind of generate that finance based on kind of hearing what stage you guys are in your business. Some of you have already started operating and you're probably generating some income from the sales of your goods and services. And for those at early stage, it may be that you are bootstrapping, so you're using money that you saved up in the past, or you might be getting investment from friends and family to start up your business. But if you haven't thought about ways that you're going to kind of like access finance, some of the other ways you can access finance is through investments or grants. So depending on the structure and nature of your business, if you're a social enterprise, I'll share these links with you before the end of the session. But you have socialinvestment.org.uk that has a list of different grant funders that will give you grants for if you've got a social enterprise or you're planning to run your business as a social enterprise. And see this as a very good platform to look for investment when your business is at that stage. It may be at this point, it might be early for you to be looking at investment, but in the long run, it might be something that you're interested in. So these are kind of some sources. Another way for you to get finance for your business is through debt finance, so through business loans. Your bank, depending on who you bank with, you can get business loans through your bank. But also, though, I put in some links to resources. Lendo is a platform that actually lends to underrepresented business owners. So sometimes it may be hard for you to get finance through a bank to the traditional route, so they do support with that. And I've also put in some details to iwaka.co.uk, and that has a list of different ways for you to get business loans for your business. So I'll give you some of that information, especially for those that haven't started and you're not sure how you're going to generate the finance. Going back to bootstrapping, a lot of people use GoFundMe. So you can use GoFundMe as a resource to kind of just tell everyone what your amazing idea is, and you may be lucky to get loads of people supporting your business. So these are different ways that you can generate business finance. But once you have the business finance, it's really about what do you do? How do you manage the business finance going forward? Like how do I ensure that I know where my money's going? How do I understand how much money I need for my business? So we're going to be going through that today. So one of the key things, obviously I'm a numbers person, so I always like to understand the numbers, but I think it's really important that as business owners that you do understand your numbers. I understand that, a lot of you, I know some of you have mentioned that you've got accountants or you've spoken to accountants, and myself as an accountant, with my clients, I always like to ensure that they actually understand your numbers, because it is your business and you might have someone else helping you manage the numbers, but it's really important for you to actually understand those numbers yourself. So some of the key questions I like to ask is like, do you know when the business and quieter periods in your business? Do you know what seasons you're going to be really busy? Do you know what seasons where it's going to be a bit quiet? And if you do know those seasons, how do you plan to manage these periods? How do you plan to manage when it's really busy, where you might need more staff coming in, where you may need to get more stock or whatever it is that you're trying to sell? And how do you keep money aside for big expenditure items? There might be a piece of machinery that you might need to get for your business. There may be a massive campaign that you want to work on. But if you're not able to understand your numbers and manage it, it'll be very hard for you to get to that stage. So I wanted to actually ask, out of the people that kind of have already started operating, and this might be more for Paul and Jacqueline, do you kind of already know what the busiest periods are in your businesses? You can come off mute or you can write it in the chat.
Yeah, definitely. The construction sector, it really picks up in sort of springtime and the summer. and then sort of come wintertime it slows down quite a bit. So yeah, it's planning for that.
So do you are you a limited company or sole trader? Just out of curiosity.
Limited company.
Okay. And so do you have people that work for you in terms of like in your construction business? And do you subcontract out, or how does that?
Not necessarily. No, I do it all in house. It's
Okay.
basically the
Okay.
design. Yeah.
Okay. And so so I'm assuming that for your type of business, you would need to like sort of buy like expenditure item, like machinery and tools and things like that to
Yeah.
kind of like carry out the work that you do.
Yeah,
Okay.
and stuff. Yeah.
Okay, great. So what I'm gonna do now, I'm gonna just sort of briefly go through different ways you can manage your finances, but I'm also going to do a demo for. I want everyone to kind of if you have access to a PC, we're gonna go through a quick financial plan so you can start thinking about what kind of things you need to be looking at. Thinking about for your business. For the guys that have already started, you probably already know all of these things, and for the people that haven't started, it may be that these are the things that you need to think about. So there's three key ways that I think is really important for you to use to manage your business. One of them is financial planning. So, as I said, understanding your costs, the amount of money your business will make, the amount of money you're going to be spending in your business. Another key thing is bookkeeping, so it's keeping a record of all your income and expenses, and we're going to be talking about that today. And tax planning, understanding when you need to pay tax and what type of taxes you need to pay for your business. Before we move on, has anyone got any questions? No? Okay, great. Okay, so what we're going to do now, I'm going to share this with you. Just I'm going to share this with you so that we can go through this template. Can you guys see my screen? Is it still showing the slides?
Yes, I can see it.
Yeah.
Oh, is it showing the template?
Yeah, it's purple with the zeros.
Right.
Yep.
Great. Okay, great. So what I'm going to do, I'm just going to put in the chat a link to this so that you guys can download your own copy. You can use it in the session, or you can save it for later. Just put it in the chat and just let me know when you've got it. So how you would have to do it, if you it's a Google Doc, but if you go to File, and if you go to Download, you can download it into Microsoft Excel. If you use Google, you can just do File, make a copy, because you won't be able to edit this exact version. Just let me know if you've got any, if you have any issues accessing this and using this. I'll just give everyone a couple of minutes.
I could download it and open in Excel just fine.
Great,
Just let you know.
great. Thank you. I'll just give everyone just a minute to kind of like be able to access it. If you're not able to access it, I'm going to be going through it in the session. But essentially, this is just a basic template. It's a basic template for you to be able to kind of plan, forecast for your year or the next couple of months or each quarter, depending on how you want to use it. Being that some of you are very early stage, this is definitely something for you to start looking at now, so you can just have an idea of how much money they actually need to start. So a lot of the times we may not start our businesses, or we take a bit longer to start our business because we feel that finance is a blocker, but in reality we don't always know actually what finances we need, how much money do we actually need to start. So for example, here we've got startup costs. So it may be that you know already that you have, depending on what it is, you might have already been selling, you might have already kind of generated some type of income for your business, so you know you can put this in here. Or it could be that, as we mentioned before, you've been able to save money aside, and you're putting that money aside, and you said, okay, actually I've saved up £1,000, but then what can you actually do with the £1,000? What do you actually need it for? So with this template, it's broken down into kind of different sections. I'm going to just briefly explain what some of these sections are, but then I am going to go around the room and ask you guys if you can think of any type of cost that may pertain to these different sections, anything that you may not have thought about, and and so forth. So the first question I want to ask, does anyone really does everyone understand what a fixed cost is and what a variable cost is? I don't know if that's stunned silence because no one's ever heard of it or not. Okay.
Sorry, you asked what fixed costs were?
Yeah, if you know what a fixed cost is and if you know what variable costs are.
Sure. Fixed costs are things that are going to carry month to month being approximately the same. So this will be things like rent, equipment rental, any kind of overhead for salaries, and so basically things that will stay constant. And then variable is going to be kind of things that you have more control over. So goods and services that you might be using through your business, equipment that you might buy additionally that cost won't continue. So, yeah.
Okay, excellent. Thank you very much. Thank you very much, Amy. So I hope, Amy done gave a really good explanation. So I probably don't need to further explain it, but with this template, it helps you identify what kind of ongoing costs you're going to have, even if you're not making any sales or you're not or you haven't delivered any services. So those are your fixed costs. So as Amy quite rightly mentioned, it'll be things like rent, mortgage payment, or things like that, where no matter how much you sell, how many services you deliver, you still have to pay them. The reason why I feel like this is really important for you to understand your fixed costs is for you to know, even if I'm not generating any income, what costs do I still need to leave my business? So it's really important for you to have an idea of what these are. So at least you know, okay, actually, how much money do I need on a month-to-month basis, even if I'm not generating income? So then you can have a look and see, okay, how much money do I need to put into my business? How much money do I need to raise in order to make my business viable or break even on a monthly basis? What I'm going to do, because as I said, I like to make this interactive, so I'm going to get you guys to talk. So I am going to ask, I'm going to pick out a few names and ask you guys to tell me what kind of fixed costs you believe that you have when you're starting your business, and what kind of variable costs you have. So Celine, I know you mentioned you're going to be starting up a snack business. Based on kind of like what we've discussed now, what's on the template, what kind of things would you say will be the fixed costs that you would need to take into consideration? Okay, Nan, I'm going to come to you. So I know that you mentioned that you're thinking of starting a new business. What type of things what type of costs do you think that you need to consider when you're starting your business in terms of your fixed costs?
Well, my business will be virtual. Yep. So I won't have any bricks and mortar. Mm-hmm. I think it will be the actual goods, because I'm hoping it's a training and education business. Mm-hmm. So I've got to try and assess what the goods are. And there may be some books that maybe I sell, but I haven't 100% figured out the concept.
So that's a good. So I like the fact that you mentioned that it's a virtual business, and it's sort of you're not going to have a physical presence. So what kind of things? So like with a virtual business, would you be using? Would you have a website? Would you be having to pay for a domain? Would you have to be having to pay for email account and things like that?
Yeah, it actually has a website, and already paying for that.
Exactly.
But I don't have, so that's obviously a fixed cost then.
Yeah, exactly.
Okay.
So it's kind of those things that you're still paying for, no matter, because you're paying for your website whether or not you've made any kind of sales or anything like that anyway. You might have an email account. It may be that you've got a Canva subscription for sort of whatever, any marketing materials or anything they're trying to produce for your business. So it's all of these things that sometimes we don't take into consideration that we need to think about. Okay, so I'll just read Jacqueline, what your comment is. So essentially it's just really thinking about what type of cost, because sometimes we do miss out on the type of cost that we actually should be kind of taken into account for our business. So it's really important for you to kind of just understand what costs are you going to bear, no matter if you're making any sales or not. Okay, great. If everyone hasn't got any question, I'm going to move on to kind of like the bookkeeping side of things, how you should be keeping a record of your income and expenses.
Stella, can I ask a question? Sorry.
Sure.
So aside from the template, is there anywhere else we could go to work out what would be fixed costs and what would be the opposite?
So in terms of like understanding what are fixed costs, I mean, normally you can go to sort of like different sites like Investopedia that has really, really good information in terms of like what the definitions are for fixed costs and variable costs. I am going to, in the next part of the session, I'm going to be talking about different tools that you can use for your business in terms of like recording your income and expenses and how that works as well. So I'm going to talk about that in a bit. Does that answer your question?
Yes, thank you.
Okay, fine. Jacqueline, I noticed that you said you're new in business. So was there any question that you have specifically, Jacqueline, that you wanted me to cover in this section that were in the template? Was there anything on the template that you're not sure about that you would like me to clarify before we move on to the next stage? Just let me know in the chat. What I will do is that so in regards to the template, it's broken down into cost of sales. So cost of sales, essentially, this applies more to when you're sort of like reselling goods or you have goods in your business. So for example, Celine, for your snack business, there'll be things that you're going to be buying stock, and you're going to be buying the snacks, you might be buying the packaging for it. All of these things will come under cost of sales. It could be the stock items that you're buying, the delivery of those items as well. So that's what cost of sales mean. So once you've done this allows you to see kind of how much you're spending on the goods that you're about to resell. And then you've got overheads. Again, it's quite straightforward in terms of like what type of things you need to operate to run your business. It may be the staff that are working in your business. You've got premises and equipment. So we've gone through about rent, rates, if you've got a physical business, or if you've got a company car or car that you're using for your business as well, you put that in here. And then you've got marketing and sales costs. So this things like, if you've got Canva, you've got website, if you're using any kind of like Adobe, if you're paying for sort of like adverts on like Google, Instagram, or whatever it is, all of these things will come underneath here. And normal administrative fees. So if you have an accountant, decide to get an accountant, it will go under here. Any travel as well that you're anything you're traveling, any travel to any work, to any sites that you're working on, or things like that, or to visit a client. So all of those things will be the kind of things that you would put in here. This template is really good as well as a basic template for you to use, because at the bottom it kind of gives you an indicator of what your profits will be, so that at least you can see kind of like at what point in your business you'll start generating a profit. And if in the future you decide that you actually want to go for kind of sort of like investment funding, these are the kind of things that they would like to see in terms of like when will the business start becoming profitable. So I'm going to move on to the next. I'm going to go back to here and move on to the next slide. Again, if you have any questions, just let me know. You can come off mute or write in the chat question. Okay, so one of the key things that every business owner should do is keep a record of your receipts and invoices. And this is important for any stage you're at in your business. So for the people that have not started their business in just a business idea, there are things like Nana, you mentioned that you've got a website. So you should already, even though you haven't started officially operating things like that in that way, you should still be keeping a record of your receipts and invoices. All of these things are very, very important when it comes to doing your account and it comes to claiming taxes, and we're going to be talking a bit about that in today's session. There's different ways that you can keep a record of your receipts and invoices. You can this can be digitalized, where you can sort of upload it into different apps that you may have, and I will mention some of the apps that you can use. You can take pictures of this on your phone and save it into and then upload it into a drive, like a Google Drive or OneDrive or whatever it is you have, and make sure you're issuing invoices as well. So if you are delivering any services, you make sure you are issuing those invoices. All of these things are actually a statutory requirement, and every business is expected to keep this, particularly for when you're trying to do your accounts and trying to do your taxes. It's really important that you keep the receipts and invoices, because especially with receipts, you can claim back any expenses that you have incurred before your business started operating, and you can go back as far as 5 years. So it's really, really important that you are keeping a record of these things, so that at least when you come to do your account, you can claim pre-incorporation expenses. So just make sure that you are keeping a note of that for the guys that haven't sort of registered or anything like that. A very, very important thing is keep your business and personal finances separate. Even if you are self-employed or sole trader and you haven't set up a limited company, make sure that you are keeping these separate. You really want to make sure that you know what's related to your business and what is related to you. I know a lot of people are at the moment where you're starting your business, you are funding your business yourself, you're funding your business yourself, but ensure that you do have like a separate account. I always advise everyone to have a separate business bank account. So even if you are using money from your own money, transfer that money to your business account and expenditure everything in your business account. I'm going to talk a little bit about that in detail towards when I'm talking about sort of like tax compliance, but that is a very important point to know. In regards to the business bank account, I'm not sure if everyone has got a business bank account yet, but Hudson and Hills do have a partnership with Tide Banking, where you can get, if you sign up using one of these links, and I will put these links in the chat, you can get a £75 credit as well on your account if you sign up using this link. And also, if you haven't registered your company or you haven't registered yet and you need to register a company, Tide also offer that service as well if you open a bank account. So I'll put the links here, but I will share this in the chat before the session's over. So in regards to recording your income and expenses, you can, at the moment, there's different ways you can do this. The basic way is having a spreadsheet. So you can have like a very easy spreadsheet that kind of just says, these are all my income, this is everything that I've earned, everything that I've spent. That is quite manual. So it's up to you in terms of how well you're good at using spreadsheets in Excel, but you can also use different apps as well. So you've got QuickBooks, which is a very useful app that you can use. And QuickBooks is really good because you can connect it to your bank account. So it will live feed any transaction that goes through your business bank account. You can categorize anything that you've spent in the app. You can upload receipts as well. You can upload receipts. You can also generate invoices from using QuickBooks. QuickBooks is not the only one that does it. There's QuickBooks, there's Xero, there's quite a few ones, but do have a look online and see which ones you can use. But QuickBooks is an example, or any kind of bookkeeping software will be one really good for you to use, and it keeps everything neat. And also with that, it helps you to run reports, so you'll be able to see kind of like how much profit you've made in a particular month, period, or year. And it also really helps when you're doing your accounts, which we will talk a little bit about in a moment. In regards to online banking apps, we've got a few like Tide, Starling, Monzo. They're really good mobile apps that you can use on your phone, and you can get them as business bank accounts. I find them quite useful in terms of when you're running the business, because you can see straight away in real time, when someone's paid you. You'll get a notification saying this person has paid your invoice, and you also get a notification every time you spent money. And you can categorize that on the go, and you can also upload receipts as well. So do have a look. If you haven't opened the business bank account, as I mentioned, you've got Tide, but there are similar ones like Tide, Monzo, Starling, all of these kind of like online banking apps that you can use on your phone, which is really, really easy for you to access. So definitely keep that in mind, and do think about that when you are setting up your business, if you haven't already sort of got these kind of accounts in place. A lot of people always ask this question about like, why is it important to have a set of accounts? So your accounts are it's really important financial statements for your business. So your accounts do form, for standard business, your accounts will form income and expenditure statement, or profit and loss statement, or a statement of financial position, which is also called a balance sheet, where you'll see what all your assets and liabilities are. I'm not going to go into detail in terms of like, you know, what these are, because I am trying to keep this as straightforward as possible. But the reason why I'm pointing it out is because it is something you need to know for your businesses. So if you are a limited company and you've already got a limited company, you probably already know that you have to do a set of accounts. It is a statutory requirement for you to do your accounts. And we are having another session on the 17th of March that's going to go through business structures in more detail. So I am just going over kind of like the high level points of this, but your set of accounts is very important. If you're a sole trader business, really good for you to have a set of accounts as well, because it can tell you how well your business is doing in the year as well, and highlight any areas that need to be addressed as well. Banks also prefer to see a set of accounts for your business. It makes the business look more respectable, and it's also easy for them to see kind of like when you're applying for finance and business finance or a mortgage. It's very easy for them to see clearly kind of like how well your business is doing, what type of assets you have, and your ability to repay any liabilities as well. As I mentioned before, it can help you funding applications. So if you are thinking of trying to go for funding as well, they normally do ask to see a set of accounts for the last couple of years. And a really important part, it does form the basis of your tax return. So when you are doing your taxes, it does form that basis as well. Yes, the session will be recorded. I'm not sure how it will be accessed, but I believe everyone that's signed up for the session will be able to access the recorded session as well. For Celine, that I just mentioned that you've got bad connection. Okay, so question, tax is kind of what a lot of people don't really like hearing about, because most of us don't really like ones to pay tax, but it is something that you have to pay. So I've just got a quick sort of like diagram here that kind of just shows you sort of like different types of taxes you have to pay. So do ask questions if you're not sure. But this diagram is just a basic diagram about the different types of taxes, the main type of taxes you have to pay. There are other taxes, but I'm focusing on income tax and corporation tax in today's session. So if you are a sole trader or you're self-employed, the taxes you have to pay is income tax. I've included employee here, but some of you may be directors in your companies, and you may be employees of your company. So you are subject to paying income tax. I'm going to talk about the rates in a minute, but this is just sort of like a diagram so you can clearly see kind of like what taxes you may need to pay. So if you're self-employed, that goes through sole trader, freelance, or contractor. So if you fall into any of these brackets, this is a tax that you need to pay. I think it's really important for me to highlight who income tax applies to, because it may be that some of you may have a day job and you also may be starting your business as a side hustle. So you really need to take into consideration that you will be getting taxed in your day job, and if you can also be getting taxed in your business as well. So that's very important for tax planning as well, for you to kind of understand what taxes you need to pay, how that's going to impact your cash flow as well. Corporation tax is a tax that needs to be, that's payable by companies. I've put in sort of like very high level company structures here. So you've got a limited company, you've got a community interest company. Limited companies can be companies limited by shares or companies limited by guarantee. Again, I'm not going to give the full details because you're going to have a whole session on the different structures, but just to bear in mind that if you are thinking of registering under any of these structures, corporation tax will be payable on any profits that are made. Community interest company is an official structure for a social enterprise. So if you are thinking of setting up a social enterprise, it's most likely that you will set up as a community interest company, and the corporation tax will be payable on any profits that are made. This next section, it's just got the different rates of tax that you have to pay. So with income tax, with all taxes, it's payable when a gain or profit has been made. I'm not sure if everyone kind of knows what a profit is. I know some people may not thought about what that is, but essentially a question I get asked often is that, am I paying tax on all the money that I earn? Not entirely. You pay tax on the money, all the money that you earn after any allowable business expenses. So what do we mean by allowable business expenses? Any expenses that you've incurred in the course of your business is an allowable business expense, and it's normally deductible for tax. So say, for example, you mentioned before type of things like rent payments, staff buying stock and things like that. So if you take all of that away from the revenue, whatever you have on the bottom line, what you have to pay tax on. If you're buying stuff for your business that are not related to your business, so for example, if you decide to go and get your hair cut, or go and get your nails done or something like that, that is not related to your business, you will still have to pay tax on that. It's not deductible for your business. I hope that is clear. I know I'm going a bit fast, but I'm just conscious of time. But just let me know if you have any questions, or you can just stop me in my tracks, or just put a message in the chat box. But essentially, you pay tax on anything you have after profits. For income tax, it's payable when a profit is made, as I mentioned before. If you're signing off to a trade, everyone has a trading allowance of £1,000. So if this is for sole traders, by the way, self-employed people. So if you start your business and you're generating revenue and you haven't made up to £1,000, you're not required to pay tax yet. Once you've hit £1,000, that's when you have to then register officially with HMRC and start declaring your taxes to HMRC. Everyone also gets a tax-free allowance called a personal allowance, and it's currently at £12,570. But this personal allowance is spread across all areas of income tax. So say, for example, in your day job, you have a day job, that may already take up your personal allowance. So it would mean that anything after that, you have to pay tax on. There's different rates for income tax. Starts at 20% on anything you make up to around 50k. Then it goes up to 40%, and then once you've made over 150k, you start paying tax at 45%. So it's really important for you to understand these rates, because that can impact the type of structure you decide to take for your business. So you may decide that you want to be a sole trader, but then if you're starting to make profits, start in 50s and 60s, you're starting to get taxed at 40%, then that's when the tax planning kind of comes into it, and where you may feel like being a limited company might be more beneficial. The reason why I say that is with corporation tax, which is the taxes payable by companies, the rate currently is 19%. So as you can see, it's a sort of like a big difference between kind of like having to pay 40%, 45%, whereas with a limited company, you're only paying tax at 19%. So these are the kind of things that you kind of need to be thinking about when you're structuring your business. I know some of you are already registered as a limited company, so you're probably already kind of using these kind of like tax efficient ways, and you also just need to think about how you're paying yourself out of your company as well. So if you're paying yourself as a director, as I mentioned, you will be liable to income tax and national insurances as well. Has anyone got any questions? I know tax is a bit of it can be a bit of a beast, but again, I've tried to keep it high level just for you to understand kind of what type of taxes you may need to pay for your business. If not, I'll just go on to VAT. So VAT is a tax that the tax that you have to pay on goods as well. So when you go out, you notice that you have to pay VAT and tax. Why it's beneficial in a business? So for businesses, you only need to register for VAT if you've made a turnover of 85k. You can decide to register voluntarily for VAT, and the benefits of that is that when you if you bought anything that's attracted to VAT, or you pay for any goods and services that has VAT on it, as a business you can reclaim the VAT that you spent. So that's why some businesses, for example, if you're doing very big expenditure items or spending a lot of money on things that attract VAT, then you may want to reclaim that 20% back on those goods. So that is why it can be beneficial to register for VAT, even if you're not at the threshold of registering for VAT. But one thing you have to always remember is that when you, depending on the types of services that you offer, most of the time it's going to attract VAT. So if you are VAT registered, it means that you then have to start charging VAT on your services. The reason why I want to point this out is that if you are kind of like a growing and new business, sometimes if you're trying to be a bit more competitive and other customers are not VAT registered, that means that the prices for their goods and services is going to be 20% less. So you do need to really weigh up the benefits of you registering for VAT when you don't need to register for VAT. But if you do, then do take into consideration those factors. Some people also register for VAT because that, depending on if you're working with a big organization, it does make you look like, you're a bigger organization because you're VAT registered, and it's an assumption that you're earning a certain amount of money in the course of business. So that's just something for you to consider. Again, if you've got any questions, just feel free to raise your hand or come off mute, or put a chat in the box. Just let me, has anyone got any questions specifically on anything that I've spoken about, or stunned everyone into silence?
Sorry, Stella, just one question on the VAT. Do you need to predict what your VAT would be within a tax year? Because if you're on that sort of threshold of 85,000, do you think that do you need to declare that, or could you let it run out until the end of year?
Good question. So how it works is that, kind of going back to kind of what I was discussing before in terms of you keeping a track of your income and expenses and things like that, what you need to ensure is that you are monitoring once you've hit the 85, once you're nearly hitting the 85k threshold. How it works is not necessarily on a unless you probably know this already because you've got your business, but it doesn't actually, it's not necessarily on a calendar year. It's based on what your accounting period for your business is. So say, for example, you started your business in say August of last year, then you have to monitor up until the end of July this year to see whether or not you hit 85. It may be that you actually hit the 80. maybe that you've hit the 85 in mid-August this year, but then that's a new year, if that makes sense. So then you kind of start again from that point in terms of monitoring when you hit the 85,000. Does that answer your question?
Yeah, that's fine. Yeah.
Okay. Yeah, so just ensuring, so for everyone, just ensuring that you're keeping a track of what your accounting year is, what that period is, and seeing where you've hit the 85 threshold. Once you've hit the 85 threshold, and also another thing to mention, I think Paul, this kind of maybe where you were getting at as well, it may be that you've had a year where it was like an exceptional good year, but it's not normal for your business to normally generate that type of income. So what you would do, you would tell HMRC that actually this is kind of like an anomaly. We don't usually do this. Sometimes they give you a dispensation, or they wait for you to prove that, and then you can deregister VAT. Hope that makes sense.
Yeah, that's perfect. Yeah, thank you.
Okay, great. Okay, so one of the tax compliance is really important. The reason why is because a lot of businesses they can have issues with tax compliance, and it can impact your business if you get yourself into a situation where you're owing HMRC money, and it can impact your business. So one of the key things that people don't normally do is that when they start a business, they think that, oh, actually, I only need to declare once I've started to make a profit. As I mentioned before, not declaring is actually a criminal offence. So once you've actually started trading in business and you're earning money in your business, you have to declare with HMRC. If you, as I mentioned before, once you've made at least 1K, you should be registering with either HMRC if you're going to be a self-employed, or you should be registering your business as a limited company, or whatever kind of registration, whatever structure you decided to go for. You must declare all income that's above 1K, even if you have not made a profit. So you have to declare this with HMRC. This is something that's really close to me because I used to work in HMRC, so I understand how they work. They have got a lot of random checks and intelligence that they do. So if you are operating as a side hustle and you're not sure, please do seek advice about when you need to kind of register and doing the right thing. So HMRC do have access to kind of like social media and seeing, okay, are you acting like you're operating as a business? Are you selling goods and services on Instagram or whatever it is, on Facebook? You're not declaring it. They have got access to that intel as well. So you don't want to get yourself in a position where you're in trouble before you actually even started your business. The running property business, making sure that you're declaring all the properties that you have and not just parts of them, and that you're ensuring that everything is on your books, because again, HMRC, the way the country runs is we run on taxpayers' money, so it is in their best interest to do as much sort of like checks to ensure that people are paying tax. A lot of people don't always really know when the deadlines are. So if you're self-employed or a sole trader, the tax year runs from April the 6th to April the 5th of every year, and you have to then submit your tax return by January the following year. So for example, for this tax year ending this April, you have it up until the end of next January to submit that, and that's the same every single year. If you don't, you'll be liable to fines and things like that. Corporation tax is due 9 months and 1 day after your year end. So normally your year end is based on when you registered your company, the company's house. So if you registered your company, as I mentioned before, say for example in August, your following year end will be to the end of July the following year, and then you would have to submit and pay your corporation tax 9 months after the year. In both of these instances, even if there's no tax to pay, you still have to do tax returns and submit them, or you will get fines and penalties for it. A key question that people always ask is, do I need an accountant? And I know a lot of people may not understand or know whether or not they need an accountant. If you are unsure of what your tax and account obligations are, speak to an accountant. Definitely speak to an accountant so you're clear about what you need to do. If you've registered your limited company, a lot of people register and you haven't engaged in an accountant. When you know that you've got accounts and tax returns due, engage with an accountant if you're not sure about doing it yourself. And I always advise you to get an accountant to do, because it's a lot easier, and it will take a lot of stress off your hands, and at least you feel relaxed that it's actually been done properly, rather than you trying to do it yourself. If you have got a tax and accounting background, then by all means you can go ahead and do that. If you see yourself in a position where you've received fines and penalties from HMRC or Companies House, again, speak to an accountant. And if you just need some advice, you're not sure, you want to do something with your business, you want to purchase something, you've changed, your situation has changed, then again, just seek advice. And one thing that people always feel like you have to kind of have a whole accounting package to speak to an accountant. No, you can have one-off consultations with a lot of accountants. Like myself, I offer just one-off consultations with advice or advisory if you're not sure, before you want to commit to having a full-time accountant. Just some of the key takeaways from today's session is, make sure you understand your numbers, make sure you're keeping a record of all your income and expenditure, plan your finances, because that is really, really important. Plan as far as you can. And if you're unsure, always just seek advice from people that know more about about the subject matter. So the session that we've got half an hour left. This part of the half an hour was to do any Q&A, any networking and things like that. It's a small group, so we may not use that time, but do feel free, if you want to ask, come off mute, ask any questions, or is there any question that you had beforehand that we may not have necessarily gone through in the session, but you're still wondering about it in regards to your business, feel free to ask. So just let me know if you've got any questions. Feel free to come off mute.
The question I had was, firstly, thank you for a lot of this. A lot of it was, I thought I knew some of it, but there's a lot that I really didn't know. So that's really helpful, even though I'm early at the stage with this particular one I was talking to you about. When you've said, you made it very clear the kind of reasons we could possibly need an accountant.
Sure.
On what basis would you select an accountant? I mean, I know that's you, but if you were advising us to say, right, you've identified you probably need some help with your finances, how do you, where do you look for an accountant?
It's a really, really, really good question. And I think a lot of people ask this question a lot. Me personally, in terms of how I got most of my clients, it's been on recommendations. So if you have other people that that are within business and they've got an accountant, a good place to ask is, okay, who are you using? I always say speak to a few accountants, because the most important thing you need to do is have a good relationship with your accountant and make sure that you understand your accountant. So most of my clients are early stage businesses and businesses from underrepresented groups, because I would like to pride myself in talking jargon free as far as possible and just really explaining any terms to my clients, no matter how basic or how complicated it may be. So it's really making sure that you're comfortable with your accountant, you understand that they're open to answer any of your questions and understanding your numbers and things like that, and also they understand your business as well. So sometimes if you've got a specialized business, for example, there are beauty people that specialize in beauty businesses, people that specialize in property businesses and things like that. And if your business structure is slightly complex, then try and go for those ones that specialize in those businesses if you feel that's what you need. If you're sort of just starting up, just make sure you have an accountant, as I said, that you can have a good relationship with them, and also you're able to work well with them, because it is a relationship with your accountant. And one thing I always to tell people to be mindful of is that if you ever have an inquiry or an inquiry from HMRC, they're ever querying anything you've submitted or anything like that, it's actually your responsibility as a business owner to respond to those questions. If you have a relationship with your accountant and you don't actually understand what your accountant has done, then that leaves you in a compromised position. So it's really important that, yes, you do leave your hands off, your accountant does the work, but it's just having that understanding. So it's very important that you kind of understand who you're working with. I hope that answers your question.
Thank you. Yeah. Okay. Got to do some thinking. Thank you very much.